Hello everyone and welcome back. If you are wondering why am I shooting this video from car, I'm at the office today meeting a mortgage agent to answer so many mortgage related questions. Many people have so many questions about mortgages, especially about the interest rates and terms to be included. So I'm going to talk to a mortgage agent to answer some of those questions today. If you have anything specific, comment them down or DM me on Instagram or email me. I can call you and clarify those questions, and I can also get you talk to a mortgage agent so that you can get them answered. Welcome back. I'm at the office now, and here is Seema Doshi with me. She is a licensed and experienced mortgage agent who has so many years of experience and worked with so many clients. So I'm here with few questions for her to understand more about mortgages, which can help my clients as well. If you have any questions, you can leave them in comments or DM me or contact Seema as well. I'll leave her contact details in the description and we'll get back to you. Hi, Seema.
Hi. Nice to meet you.
So I just have a few questions for you today, just to know high level details of it. If anybody wants to buy a home, of course, mortgage is the most important thing. They'll have to get the mortgage.
Correct.
Like there's very rare cases that they're putting everything in cash. So if they want to apply for mortgage, what are the factors which will be considered for you?
To get a mortgage approval as well as get a good interest rates, it always depends on 5 factors. Okay. One is income. Second is down payment. Third is your credit.
Okay.
4 is the type of property you're looking at. The 5th one, if you have any debts.
Okay, so the current debts like all car or any
car
other
loan, student loan, credit card debts, secure, unsecure line of credits, all depends.
Okay, and all these from here itself, like from Canada itself. Like if anybody's from immigrant and they have some loans back home, that doesn't count. Like we don't have any way
It
to
doesn't.
calculate.
Yeah.
Okay.
Actually, we review the credit bureau and we look at the debts listed there. Those all will be considered.
Okay. Yep. And I always been telling in the videos that pre-approval is very important. Like before you start your home search, even not after getting into it, but even before getting into the search, getting pre-approval is very important. It tells you how much you can afford. It's waste of time and waste of emotions if you go into the market and look for something and which you cannot afford. So it's always better you get the pre-approval. So on that, for the pre-approval, if somebody wants to get a pre-approval, what process should they follow?
Okay, so there are a few documents and few information we have to go through this. First comes the income part. So we have to look if the person is doing a person or a partner, whomever they're purchasing with, a friend or the partner, anybody. We need the household income.
Okay.
So we need to look into the deep down into that. If the person is working full-time, permanent, if it's an hourly based job, if the person is a self-employed, if the person has a contract-based job. So all these have a different impact.
Okay.
So accordingly, their job profile, we need more documents on that.
Okay.
The second thing, we are looking at down payment. If the person is purchasing home for their own residence, they can go with the minimum down payment. And if this is an investment property or vacation home or second property for the children or like that, so down payment varies in that one.
Yeah.
So then we need to decide how much down payment client would like to put in.
Okay.
So that's also main factor to consider their eligibility to approve for the mortgage. Right. But then the third thing is the credit and the trade transactions. The credit, like if it's an insured deal, someone is purchasing the home for their own residence, it's an owner occupied property, that we can go with a minimum 600 credit score. And then if it's a conventional, it's 680 or so, and that too also depends on a lender to lender what they accepted, but this is like a basic guideline. Next factor is their debts.
Okay.
What kind of debts they have. So we have to consider if they have any debts like a car loan, student loan or credit card loan or anything, we have to consider into the ratio. So more the debts, you can approve for the less mortgage amount, right? So less debts are better, or we ask client if they can pay off the debts. so they can eligible for the mortgage. And the last and very important thing is what type of property you're purchasing this for. If it could be a owner occupied or vacation home or investment property, for the purpose is important. If your kid is studying in some university and you want to purchase home near to the university, that is considered as your primary home too. So this is all depends, all different scenarios. Yes.
And from a client, they have to provide the income documents, and what else will they have to provide for pre-approval?
Pre-approval, I need to see the source of down payment as well, income documents and their bank statements. I will ask them to send the debts if they have any. I would like to know more about what type of property they are looking into it, what is their budget, and what all other requirement they have. And considering all this, I will ask them to send a package, and then I will just look into it, and we can apply for the pre-approval.
Okay. And if they are getting a pre-approval kind of today, and how long can they use that approval? How long will that be active?
So that's also depends on lender to lender, but it could be from 90 to 120 days that can be eligible for.
And the interest rates, if they are getting logged on an interest rate today on pre-approval and the interest rates reduce later, can they change that, or how does that go with the interest?
For pre-approval, we are locking the highest rate, but if the rates are going to go down, they can eligible to get the lowest rate.
Yeah, I think because I spoke to recently a client, they were like, what if the interest rates are reducing more and I'm getting a pre-approval today and I'm locked on a rate, losing on that?
I understand. So we are locking the highest rate for the pre-approvals.
Okay.
But if the rates are going to go down while you're purchasing the property, definitely you can take the benefit of the lower rate.
That's a good point to know. That process itself will take some time, and you have that flexibility, and whatever the best interest rate for you at the time of closing, that will be finalized. And what is the around approx interest rate for let's just take an ideal case, IT employee, couple IT employed earning around 160, 170K and good credit score. What are the interest rates now?
Okay, so you're talking about for the owner occupied
for themselves, for the
right?
first home.
Okay, so it depends. The rate of interest depends on how much down payment you are putting in. If it's an insured deal, it's a bit attractive rate because client is paying upfront the CMHC insurance fee. If you consider fixed rates, it's little under 4% right now, which is very attractive. And if you consider the variable rate, it's nearly 410, 415-ish we can get for the 5 years variable. And if client is putting around 20% down, then rate is a bit higher, like a 415, 420. So it's fluctuating, right? Also, it's based on a credit score. So there are a lot of factors, right? People always come and ask, what will be my what will be the best interest rate you can give? I say it always depends on the client, right? What kind of profile they have.
Other than the interest rate, what are the other factors they should consider to understand this mortgage is good, I should go with this?
Okay, first of all, there are a lot of different lenders and they have different policies. Considering the cashback and the interest rate, that's more attractive for everybody these days. But you also have to consider the breaking penalty. If you're breaking the mortgage in between, how the lender is calculating the penalties. All lenders are calculating the penalties different way. If you have taken a cashback and if you're breaking the penalties, you have to give that money back to the lender, right? Plus also you have to consider the prepayment. Suppose you're getting bonuses, or maybe if you're getting gift from the parents, or if you have some property back home or here and you're planning to sell it off and you're putting to pay off this mortgage faster, then you have to consider the prepayment penalties as well. So depends on lender to lender and your situation, right? You have to consider which lender is giving best interest rate considering your financial situation and your long and short term goals, right? That's very important.
That's good. I think most of the people they think interest rate, if I'm getting the least interest rate is the best one and I'll go for it.
Correct.
But there are different factors you should consider before finalizing. So yeah, that's all for my questions, Seema. Thank you so much. So Seema works with more than 90 lenders. So if you contact us, we can see the best scenario for you, what would be the best interest rate and the best terms for you. We can get on that. So contact details are mentioned on screen, also in description. Get it done. Thank you.
Thank you.
I've been dreaming on in my head like I've seen it. A life worth living is a life with meaning. I'll do what I love till my heart stops